All right, thank you for keeping the wait. I'm sorry for delaying us. All right, like I said, last 3 days ago that we were having so the objective for this class is number one, at the end of this class, we will be able to differentiate the factors influencing the market movements in the financial market. Then number two, we'll be able to fundamentally indicate when a market instrument is selling or buying, which is how do we get to indicate? We don't just indicate by impulse, we don't just indicate sentimentally. We indicate based on facts, based on reasons, so as to know that, okay, this is the reason why I'm staying in this market to buy or to sell. And for whoever is gaining interest in buying the market, is gaining interest based on something. So for whoever is buying based on facts, and whoever is selling based on facts. And at the same time, we call it an entering condition and an exit condition. And thirdly, one of the objectives also says how to familiarize with some primary market fundamental updates that I call the news. How do we familiarize with them? How do we get to know? There are days that the government of the major currencies and currencies and country tells us that there will be a very huge volatile movement in their currency, and of which can affect and help the currency to move profitably to our own favor. And if it can move to your favor, how does it move to your favor? If you can predict and get facts on how the market will move, and you can as well follow. It says the trend is your friend. Hence, follow the trend. It's only those that follows the trend that makes profits, and those that antagonizes the trend ends in losses. So one of the objectives of this class is to want to show us how to follow the trend. Now, the trend is the market, and who knows road? The market knows the road better than we do. So we need to follow the market, and as much as we're following it, we're following it profitably. So for how to prioritize market entries, the question is, there are a lot of movement in markets, but there are times that you don't want to enter the market. So we get that there are a lot of, the market moves in different ways. It goes ups and down. But the fact that it's going up now does not mean you can enter now. Do we get that? The market is moving upward, but doesn't mean that the fact that it's going up, you need to enter at that particular time. No, there's something we call market entry. There's always a point that you enter the market, and to be a very, very, very smooth entry for yourself will help us in noticing that trend today. And number five, lastly, very importantly, how to initiate and identify copy trading. So many of the signals we drop on the platform, I hear people saying, I don't know what it means. I don't know how to initiate it. I don't know what to do with it. And I don't know how to go about it. Today will be also touching a bit of it. So please, if you know you can hear me, if you can hear me, please drop number one on the chat. If you are following and hearing me, please drop number one on this chat box now. All right. Yeah, the class is recorded, so not to worry, to be on the YouTube channel. Great. So let's start very quickly. All right, so very quickly, we'll be doing the first objective for today, and I will appreciate and I would like you to drop on the chat box and make welcome one of our profitable financial analysts in person of Mr. Michael. Let's have him on board. Thank you very much, sir. The mic is yours.
Hello. Morning, everybody. Can you hear me, please? Okay. Good morning. If you can, my name is Michael. If you can hear me, please just put a 1 in the chat box, please. If you can hear me well, just type 1 in the chat box. Okay, thank you. Okay. Okay, thank you. So I'm guessing that we can all hear me. So I'll be taking you on the first item there, which is the factors influencing the market movements. Okay. Okay, I'll share my screen with you right now. Okay, so basically in the markets, there are actually 2 basic things that that actually influence markets analysis, and that's technical factors and fundamental factors, or you say technical analysis, fundamental analysis. What's a technical analysis? Most times there are things that happen straight off your charts that you can see happening. Okay, like right now you can see my chart, right? I believe everyone can see my chart here right now. I have a chart right now up here of gold to dollar. Now, things actually can affect that are technical on the chart are things like support and resistance levels or the market structure. Now, we have support and resistance level. We also have looking at my chart right now, you can see it's forming a pattern. The structure, the first part is a downtrend. The second part is going up. Or you can see all around it, you can see it comes up, it goes in a kind of a wave. You can see waves, highs and lows. Now, these basically are potential support and resistance areas. Now, if I drew a line, a horizontal line, I'll draw one here right now. I'm going to be like, you can see the red line there, right? I believe everybody can see it. You'll see a trend that is going on now. From the left of the chart, it says 12th of September. It's going all the way to the 18th of October. And mind you, what I'm going to show you here right now, it happens on every chart, financial chart. You'll see, if I adjust this line, you'll see something happen. Now, let me bring it down first. Now, can you see from this side or the left side, you see the price broke down and it now came back up here, but it did not go back through before it fell down. This shows that at this point, it's a potential resistance level. Now, if you look further down the chart, you'll see something happen. All around here, price was doing similar things. Look over here. Look over here, it came down, it did not go back. So most times these patterns, these levels normally repeat themselves. If I took this further down, let's take it over here. Something similar happened here. Look on the right here. This here was resistance. It could not go through. It keeps coming up, going back down. It busts through, it goes back down. It busts through, it goes back down. Now look further down the chart here. It did the same thing. If we move this further down, look down here. This now is support. It comes here, it bounces up, bounces back up, bounces back up. It repeats itself here. And the same way over here, this same line becomes resistance here. We talk about this is a technical parameter that actually affects the market. We look at all these points, look at points of entries, points of exit, what might happen around areas in the market. Now, if I took this map further down, I'll do that for you just now. You'll see this same line, if we went back, well, we can actually map it elsewhere. Let me take it higher. Let me bring this here. Now see, I just chose this point randomly here. Can you see that? This is on the 25th of August. Over here on the 17th, price also danced around that zone. Over here, it danced around that zone too. If I go further back, look, the same thing here. It struggled to pass through, but it eventually passed through. This is called technical analysis, and this is a technical factor that actually affects. Now, there are other factors that can also affect. I'll delete this line first. I have, normally people plot daily support and resistance level. That's the highs and the lows, or weekly support and resistance. That also affects the market. Fortunately, I have an indicator that does that for me automatically. That's auto SAR. That's auto SAR. You can see I'm adding it to the. Now, this is showing me support and resistance levels. I'll just take this to the beginning of the chart. So, now you look at this. We have over here daily resistance, D1. We have here weekly resistance, here hourly. This has been plotted automatically for me. I can find this manually myself, but I have a software that does it automatically. Over here is hourly resistance. Those are the red ones. The ones in blue are support lines. Can you see? Support, W, support, H1 support, D1 support. That's daily, weekly, hourly, okay? And monthly. So now let's look at what's happening. At D1 resistance, look at what happened here. Can you see that? We have the price fighting to go through, but it got rejected, went back. It came back up again and it rejected and came down. The same way, you look at the weekly W1 resistance. Something also happened all around here. The same way over here, 4 hourly, the same thing. If we went back, it's doing that. So these are all factors that affect markets and movement. These are just two factors. There are also lots of other things. There are other things like trend lines. There are other things like moving averages. They all dictate lots of things inside the markets. They're all technical indicators that let you know what's happening or affects the market. We also have fundamental that also affect the markets. Now I'm bringing up my chart here. You'll see it side by side. I know we can all see it right now. Basically, it's all things that happen in the news, things that happen every day. I know some people, there was a time when FOMC actually dealt with a lot of people. The FOMC, we have the CPI, it causes major moves in the market. And I know lots of us have experienced that. They say news is coming, news is coming. We told you that you should have come onto Forex Factory or FX Streets and take the calendar. And normally you highlight the red folder events. Normally there are more things that happen. Let me show you. Go to the filter. You have lots of multiple events that happen every day. Apply filter. Now, on a normal day, today is what? The 19th. Let me go to the 19th. That's here. On the 19th, we have lots of news that have been happening since 12:30 this morning. AUD, Australian dollar, it says MI leading index. British pound, the CPI, it came up at 7 a.m. this morning. Look at all the different core CPI, PPI, all these things, they all have meanings and they're all indicators in the markets. News that come out that actually affect, these are all fundamentals. Now, something happens, this CPI is a consumer price index. PPI is, I think, a production price index, and all others. When you click now, basically all the yellow folders and the orange folders, they don't really influence the market so much. You can see as I'm scrolling that we have red, yellow, red, orange, and yellow. We normally don't focus on the orange and the yellow. We focus normally on the red and on folders that are gray, because they're the ones that actually influence the market. So I'll put my filter back the way it was. Right. So for today, we've had the GPB CPI that happened at 7 a.m. If you go on your chart, this was 7 a.m. in the morning. I believe there was a slight spike in the markets during that period when the figures were coming out. Now, when you click on it, it's going to give you more information. Like here, I've clicked on the folder. It says source, Office of National Statistics, says measures change in price of goods and services purchased by consumers. They bring information on that. It says now, what's the usual effect? Actual greater than forecast is good for currency. What does that mean? When the actual, there are always two different things that are put there. There's the actual, what's it called? This is what the news brings out, the actual figures, and this is forecast. So the forecast, what it is, if it is greater, the currency gets stronger. So these are all things. So apart from this, lots of other things also influence the market. We have news, you watch the news, like you heard Ukrainian war happening. Because of the Ukrainian war, lots of things have been happening. Food shortages, price increase, inflation all around the world. Those are all fundamentals. So basically, you can find out lots of all these things from your news that affects the market. And you see, if OPEC is having a meeting, lots of times that affects US dollar and affects all the currencies adversely. All the technicals don't work at such times. Okay, so basically, those are the things that actually might affect the markets. Okay, okay, thank you. So I'll be handing over back to Mr. Francis. And thank you for your attention.
All right, that was all right, that was a very powerful lesson there. You can't hear the speaker. Oh no, that's impossible. That should be from your hand. That should be from your hand. So that was a very powerful lesson there. That was a very powerful one. That was a very powerful one. So please, can we just type on the chat box and thank the speaker for the little time and knowledge shared? Kindly use the chat box. Thank you, Mr. Michael. Thank you, Mr. Michael. Well, appreciate the speaker. All right. There is always, some people believe sometimes when people share knowledge with them, they believe, they say, it's what I know already, it's what I know already, it's what I know already. But trust me, no matter what you know, there's always something you've not known yet from what you know. I've been trading for the past 6 years now, and I'm telling you, I'm still learning from beginners, to be precise. I learn from beginners, I learn from those that are still coming up. So there's no limits to what and to where we can learn from and from what we can learn. We just need to give ourselves the time, the space, and the listening ears. So thank you, Mr. Michael, for that. We really appreciate you.
Thank you.
Okay, so having done that, we'll quickly leverage into the second objective, which is how to fundamentally indicate when a market instrument is selling and buying. What do we mean in a nutshell is that markets will always go to two directions. There is no any other direction aside from two-way direction. It either it goes up or it what comes down. But there are algorithms. The market moves in algorithms. And these algorithms are what we call technicality of the market movement. But the question is, how do we get to know that is market? And there are two factors hindering the market. Mr. Michael have been able to teach us the technical factor about it. When we talk about the technical factor, we talk about what is happening within the chart. What is happening within the chart? Oh, sorry, I have not shared my screen. Sorry about that. So I believe you can see my screen now. So Mr. Michael was able to feed us the technical aspect of it. And when we're talking of technical factors, these are factors these are things that happen within the chart, within the four walls of the chart. So once many of these things are the things that we see within the four walls. So when we talk of fundamental, we're talking of outside the chart box.
Recording in progress.
So we are talking outside the chart box, which means events and occurrences that happens outside the chart. So how do we now get to justify all these things? So now we'll be going into how we can fundamentally indicate and connote when a market instrument is selling and when a market instrument is buying. Then after this, then I will come up next to now explain how we can prioritize market entries. That the market is going up does not mean you can enter anytime. So at this point, I would like to welcome Mr. Michael. So kindly use the chat box to welcome him on board. You're welcome, Mr. Michael. Thank you for coming on board. So I'll bring him up now. Mr. Michael will take up the mic. The mic is yours. You're welcome, Mr. Precious. Sorry, please. Mr. Precious, not Mr. Michael. So Mr. Precious will be taking us through how to fundamentally indicate when a market instrument is selling or buying. Thank you very much. Come on, Mr. Precious.
Okay. Good morning, everyone. Yeah, so my name is Precious, and I am going to be talking about how to fundamentally indicate when a market instrument is selling or buying. So that's what I'll be talking about. Now, without no further ado, let's get to it. So I'll be sharing my screen right now. All right. Can you guys see my screen? Please, if you can see my screen, just indicate by pressing 1 on the chat box. Oh, okay. I definitely raised the hand. Okay. One. Okay, good. Okay, good. Fantastic. Everyone can see my screen. So let's get to it. When I wake up in the morning, or when you wake up in the morning as a forex trader, someone that is that wants to milk the market, I want to make money from the market and trying to make a living from the market. You know, just like Mr. Michael said, he said there are some technical things that move the market, because there are two forms of trading. We can analyze the market in two ways: the fundamental way and the technical way. Technical way, like he said, is just a thing that is related to the charts. And why fundamental way of analyzing the market is things that is based outside the chart. And you know, if you are trading forex, just like these things are real life economy. Okay, the dollar represents what? The US economy. The Australian dollar represents what? Australian economy. The GBP represents what? Great Britain economy, UK, and all that. So these are real life situations. They have their news. They have real life issues that really affect the market. If the economy of Britain is doing well, for example, it's going to show on the currency. You agree with me, isn't it? And if US is going through crisis, definitely it's going to show on their currency. So as a forex trader, how can we take use all these things as advantage? For example, do you just enter the market and you don't just you have to be aware that, okay, something like this is happening about this currency in this country. So let me see how I can use it to my advantage. So as a Forex trader, whenever you wake up in the morning, these are one of the things you should do. First, this website, I hope you guys can see my screen right now. This is currencystrengthmeter.org, currencystrengthmeter.org. This website actually shows you how strong or weak a currency is. You know, as you can see, scrolling up, you can see these boxes and the green feel of it. So, you know, without this is not rocket science. When looking at this, I can see that AUD is very strong because it has a lot of green ticked box in it. I can see that Canadian dollar is strong, but not as strong as Australian dollar. I can see that Swiss franc, CHF, Swiss franc is weak because it just has one box tick. Look at it. And look at euro. So looking at this alone, I can say, okay, fine. This Australian dollar is strong. So I will know that, okay, I would be buying Australian dollar, right? Oh, so maybe, for example, now I see a quote like, let me say AUD CAD, or let me say AUD USD. On my mind, I will know that, okay, for now, Australian dollar is strong. So I should be looking to buy Australian dollar. So that will now, although you don't take trades based on currency strength meter alone, no, that is a blind trading. You have to, you know, mix your fundamentals with your technicals so that will increase your confluence, your confidence in entering the market and your probability setups. So, for example, let's say NZD, for example, look at it here, New Zealand dollar. It is so full. It means that this currency is very, very strong. So as a Forex trader, I'll be looking towards buying New Zealand dollar. Now, there's something I want to also talk about because, you know, when we see NZD USD, some people, and I say, okay, buy, since this, you want to buy New Zealand dollar, since you want to buy it, you know, you can see it as a base or quote. What is a base or quote? For example, let me use the whiteboard screen so you guys can know what I'm talking about. I can see that here. Let me use my notepad. If you are still with me, please indicate in the chat box by pressing number 2. Okay, good. I can see that. So right now, you guys can see my screen right now, sharing pins, right? Okay. Okay, good. So here we are. I want to show you guys something. You know, because when you see the currency strength meter very full, you have an idea that yes, I want to buy New Zealand currency, New Zealand dollar, right? You want to buy it. So for example, if you see something like this, NZD USD. For example, if you see something like this, NZD USD now, you are open to buy this. You are open to buy this. You are buying this. This is what you are buying. Now, let's say, for example, now, you now see something like AUD NZD. You know that this one is the first one, this particular one is straightforward because NZD USD, the moment you buy NZD, you know, you are straightly buying this. But there's something you guys need to know. Forex market is, you know, the moment is what we are doing basically is buying and selling, and it is something simultaneous because we buy and sell in pairs. Pairs as in 1, 2. There are 2 currency involved: GBP USD, AUD USD, Euro JPY. So we sell and buy in pairs. So the moment you buy NZD USD, you are buying NZD, and at the same time you are selling USD. I don't know if that makes sense. If you see a currency pair, let me say NZUSD, for example, if you press buy, you are actually buying NZD, and at the same time you are selling USD. Now, going back to the case of the NZD that is full in the currency strength meter that is very strong. I want to buy it because I want to take advantage of it. Maybe after we see that it's very strong there, and we've done our technical analysis to see that NZD2 is going to buy, and we now see NZD USD. Definitely, this first one is straightforward. We buy it straight, and at the same time we are selling USD. So, but we don't have no business with USD. We are only buying NZD, so that's certain. That's good. So let me say, for example, you now see AUD NZD, and we want to buy NZD because it is strong. What are we going to do in this kind of situation? What we are going to do is very simple. We sell this pair, this one that the arrow is right now. We sell it, AUD NZD. Because why are we selling it? Because the moment we sell AUD, automatically or simultaneously, we are buying NZD. So, and this one is, the first one is always the base. It's called the base. Why this one is called the quote. So the first currency in front of a pair is the base currency, why the second one is the quote. And the moment you buy the base, you are selling the quote. If you sell the base, you are buying the quote. So that is that about currency strength meter. And I'm going to be showing us other side I also personally check to increase my confidence in fundamentally indicating if a currency will buy or sell. And that is the website that you guys are seeing on your screen right now. I hope you guys can see it. If you can see it, please type number 2 on the chat box so I can continue. Okay. This response so far is nice. Okay, good. So you can see it, you can screenshot it right now, marketmilk.babypips.com. So it's as simple as this. If you go to this site, let me say, for example, you've not been there before, let's go through it together. Marketmilk.babypips.com. You can screenshot it right now. So this is what is going to appear like. Just type got it. Cool. You're showing us around, so on how to use it. So you can see it here. Market snapshot, currency strength. We are interested in the currency strength. Now search for symbols. You can say, let's say, for example, NZD USD. So we come here, buy or sell, because we're trying to fundamentally indicate if the market is going to buy or sell. So this one also helps me personally. It shows us the bull case and the bear case. So if you see it, for example, okay, saying that the short-term trend is bullish, the medium trend is bear case. So for example, if I see everything aligned up in bull, maybe 1, 2, 3, 4 is or 5 is in bull, I will buy. I'll say, okay, I should be open to buy this. If I see that most of it is in this bear case, so okay, fine. Bullish means buy, bear means sell. So if I see everything lined up here, I can say, okay, well, I think this market will sell. So I will look into, okay, this is what is happening. Let me check on my technical analysis on the chart, and let me try to increase my confidence. So that's that about it. Is that simple. Use the currency strength meter.org to check the currency strength and to know if you're gonna buy it or sell it. Oh? If I N okay. Okay, but this is even fantastic. This is really nice. So you guys can actually see my screen right now. Look at this. In fact, this is even the very, very first time I'm working with this, but this looks so good. When looking at this, you can see that, okay, this is this is bearish at the moment, this is bearish at the moment, this is bullish at the moment, this is bullish at the moment. You can see that this green is somehow dull. So it means that it is, although it is buying, but it's not really strong. And you can see this is very obvious. You know, this is psychological. You don't need a prophet to tell you that you've seen red on Euro USD is telling you to sell. Just like you check the currency strength meter and we see that, you know, NZD is full. We don't need a pastor to tell you that NZD is strong at the moment. So it's really that simple. It's really that simple. No much work. No, there's nothing much about it. And also, Mr. Francis is going to be talking about news. So that will also increase our confidence. For example, let's say the currency strength meter says the currency is bad, like is really going down. And you know, the news is also saying that the currency is, you know, going down. And you know, the technical analysis is also suggesting that it's going to go down, it's going to go bearish. You see, we can just, you know, enter that kind of trade and, you know, just nail it, you know, make a lot of money easily without no stress or maybe too much psychological thing going on our head. So that's that about how to fundamentally indicate if the currencies or market instrument is buying or selling. And I really thank you guys for your time. Thank you so much. God bless you.
All right, that was a professional blow. That was a professional blow. That was big. That was massive. That was great. That's outrageous. That's what other again? Please give me grammar. Please, let's appreciate Mr. Precious. That was a very big one. It's a powerful one. Let's appreciate Mr. Precious. Please thank him. Thank you, sir. Thank you, sir. Yes, yes. Thank you, sir. Yeah, so as he has said, two-way things. Follow who know road. Once you follow those that knows the road, you will hit the right place. Get it? And when I mean the road, I'm not saying you follow me. Don't follow me. Not me, you will follow. Just follow the market movement. The market knows the way to make profits. If you get that, the market knows the way to make profits. So if you are not following who know road, and who know road, now the markets are the road now. So the moment you are not following the market, we are definitely antagonizing the movement of the market. So one thing you want to know is the market has its way of moving. You can't chase it. The moment you are chasing the market, we will keep running losses, and psychologically we'll keep running losses as well, because before you can start running losses on your account, it starts from your head. It is fear from people. I see some results on WhatsApp. I see 0.7 cents, 0.8 cents. And I can sense the emotion of fear in those trades. Wow, nice one. I can sense the emotion of trade and of fear in those trades. Why? Because they are scared of losing money. They are scared of losing money. So just please, one thing you need to know is, according to what Mr. Michael and Mr. Precious have said earlier, once you can follow these two major things, the technical update and the fundamental update, before any trader can engage himself or herself in the market, he should be very sure that, one, he knows the strength of each currencies every morning. The strength of currency changes in minutes, changes in seconds. So it takes 1 second for US dollars to become strong today. And in another seconds, now you can see my screen now. This is a dollar index market. Now you see that this dollar index market, you see the dependency of most major peers that are paid in USD are on this dollar index. Now, in a second, dollar index can drop, and once there's a drop in dollar index, currency pairs holding USD as either the base or the quotes will be affected. And at the same time, the fundamental update Mr. Precious gave to us, yeah, everything changes in color in a nutshell. So market changes in structure in just 1 second, changes in structure in few minutes. So there's no particular time to what a market. No market buys forever. So if one remains in a buy market forever, everybody should be rich. Everybody will just enter and keep buying and selling and leaving the market. So that will be off as at that. We really appreciate Mr. Michael and Mr. Precious for that knowledge shared. In fact, it's a very, 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 very big one. It's a very big one. What we are sharing with us here, well, let me just say, what we are sharing with us here are what some people are learning with $1,000. Personally, if I would charge anybody to learn this thing, I charge nothing less than $1,000. Yes. I want to pick something for you. I charge nothing less than $1,000, and there are some people that charge even more, $2,000, $4,000, 8,000. No, 8,000 is too much. Maybe like $1,000. Maybe if you are begging me too much, probably you are pricing my knowledge like bread. Yeah, I can just.
Francis, there are people who charge $100,000.
Oh, yes. Did you hear that?
Teach you how to read the markets. I know you do like that. Wow. So 8,000 is still small.
So did you get that? 8,000 is quite small from knowledge. Truthfully, on a more serious note, let's know this. One thing very visible is one of the best investments one can have to himself is the investment of knowledge. When you spend the 20%, you spend all of your days in life buying courses online, knowledge investment, personal investment, not just putting money in one place that money is running. Invest in yourself, invest in knowledge. So if anybody is investing $8,000 in knowledge, believe me, it's gonna be productive in no time. But what people want is, let me just give you to do for me. Let me just, oh yeah, come, let me give you. So many people want to learn the process. They want to know the process. So what we are giving to us here, many of us might be taking it for as with levity hands. Yes, why? Because we are not buying it with money. Money is not involved. Imagine you walk up to me and I tell you to learn my knowledge. I learned it with money as well. All of that I'm still trading today, I still learn and I still buy courses when I see one that is profitable. I still buy courses. And I don't mind even if it costs me $500, $700 to buy. So far, I'm getting the value. So one thing we should know in this room is that please try as much as possible to spend time to invest in yourself. The investment you give to yourself, we get old with you, we grow old with you, and you will still be using it to make money. So if you have knowledge in trading Forex, even at your old age, when a couple of your mates are waiting on again, they are waiting on pension. Am I right? Pension, they call them pensioners. When pensioners are waiting for pension to come in, you are there pressing laptop, buy and sell, and your pension is just coming from US while you're in Nigeria. Your pension is coming from Australia. Your pension is coming from Britain while you are here in Nigeria. So the point is, money spent in knowledge is not waste. It's not wasted. So please, all of these things you are teaching us today, we shouldn't take advantage of it, and we shouldn't be taking it with levity hands. Take it as important as you should and as you can. It's very, very, very effective. Please, it's very, very, very effective. Learn more. Don't just depend on what we are feeding you here. There are courses. You can come to me. There are courses I can offer you online on Forex that you can take and buy with money, and you will see what other people are saying about Forex industries and what they are doing with it. There are courses I can give to you to buy. Cost you a few naira, but it's not even in dollars. It's cost you a few naira. Maximum, I think maximum is 100,000 naira. So nevertheless, I'm not here to promote anything, but I'm here to just promote self-investment. So that will keep us going. So without much further ado, I will leverage into how to familiarize with some primary market update news. Mr. Michael already did that. He showed us how we can see news on Forex Factory when event comes up. There are some events that comes up. Let me just take a few seconds to do that. Now, this morning, many of you might not take advantage of that, but I was able to take advantage. In short, not just advantage. I took, let me look for one of the way I can over exaggerate it. I took a miraculous advantage. Yeah, okay. I took miraculous advantage of it. All right, this morning, a news came up on GBP, Great Britain pounds, and we have about 1, 2, 3, 4, 5 news updates on this currency. Imagine, it's just as if you are telling me that in one day, me myself in one day, I want to buy G-Wagon, Ferrari, Portable, Ferrari, what again? What name of the car again? Lamborghini, and many other luxurious cars. Volkswagen, Brabus, and then Mr. Francis wants to buy all of these cars at once. Definitely, you know one thing, if I buy this car at once, it will affect my money. Why? Because it will take out of my money because I'm buying something. And at that point, what will Mr. Francis do? Mr. Francis will now start controlling his expenditure. He won't want to spend more because he has bought a whole lot of expensive things. Now, what happened today in GBP currency pair? I hope you are seeing this. Yes, you are seeing it. We have the results came out, and we realized that GBP came out strong. So any currency holding GBP as the base, we buy. But before you can eventually decide what will happen, you will go to the chart. Now, I had a screenshot. Good. Okay, let me show us the screenshot of what I had here recently. I intentionally did the screenshot so I can feed us in the class. Here it is. Hold on, please. Okay. Oh, save this. All right, let me just use this. Now, as of this morning, when the news came up, it started from this region. It started from this region here. From the region here. I hope you're seeing this. You're seeing this long shadow. This was where the news started from this morning. And on GBP USD, it started here. Please, if you are with me and you are following me, please drop number 1 in the chat box. I want to be sure I'm not speaking to the thing here. Drop 1 on the chat box. If you're following me, drop 1. If you're learning as well, please drop 1. Ah, man, this is not 1. No. This is money you are dropping. Mr. I hope, okay, this is Mr. Michael. This is the size of Mr. Michael's account. No wonder. All right. So this was where the old news started from. Now you see that before the news, the market was very, very silent. You will see how silent the market has been until this moment. The market has been so junky. It wasn't really shouting. It wasn't really moving well. The volumes were not high. But until 7 o'clock this morning, let's look at what happened. Market was able to sell further below and broke out all of the market structure of yesterday. You should not just yesterday. All the market that has been coming before now, the market broke it in just 1 second. Market came down. So when the market came down, first thing is when you want to trade a fundamental market, let the market do its first spike, second spike, and all. Then you start trading it as it keeps going. Now, from this market, I was able to close nothing less than $1 plus with this market, considering what? Fundamental updates. Now, ever since then, market has been dropping. The same thing goes as GBP-AUD. It has been dropping further, and it is still dropping up till this moment. So I believe so well that you understand and know fully well the capacity and what a fundamental update can do. Mr. Precious said something. He said, to see the occurrence and activities of a currency, look into the economy of the country. So before I can say I want to trade GBP early in the morning, I need to go and see what is happening in GBP. I'm not in Britain and don't spend pounds. I don't have all of these things, but I can have them on my laptop. So what I do is what? Come to the internet. Forex Factory will help you identify. Forex Factory told me to buy, told me GBP is very strong, but I went to my market realizing that reverse was the case. What did I do? I followed the trend. I believe you are seeing my chart. I will come back to explain more about this chart later on before the end of this class. I'll come back to do this. There is more to learn, please. So please let us keep learning every day as we keep growing. All right, so let me see what's next. Okay, number 3, how to familiarize on primary market. So I've done that. These are the things we can familiarize ourselves with. Please get yourself exposed to Forex Factory. Very, very, very much important. It's very, very much important. Many of us don't know when market sessions come up. One of the ways you can help yourself out is you can use your Antec account to know that. Your Antec account gives you information of when the sessions of the market are opened and closed. Now, when you look below the screen, you see New York session presently is closed. London session is opened. Tokyo session is closed. Australian session is closed. So when all of this session comes up, you see the indication that it's open activity. This market will open in 3 minutes 34 seconds time. Tokyo will open in 14 minutes time, and this will open in 13 minutes time. Do we get that? So all of these market sessions comes up at this time. So please let's know that very well. Sorry, no, it will come up 3:34. This will come up 5:34. This 14:04. This 13:04. So familiarize yourself with these market sessions when you can trade profitably. Sometimes when market is not moving well, it means the market session for that currency you are trading is not up yet, which means they are sleeping. You get that? So if Nigeria is sleeping, you can't go and trade their currency because no activity is happening in the country. So that aside. So number 4, how to prioritize market entries. Now, this is the major place I am heading to. Now, many people make the mistake of, market is buying, market is selling, market is buying, market is selling. Yes, we know. Market is buying and market is what? Selling. But how do we now get to know the structure of how we can enter this market? Now, if you see so far that this market and GBP AUD as a currency, GBP is my base currency, while Australian dollars is my quote currency. We realize that market has been dropping over time. But some people make mistake of, it's dropping. They now come in, bam, enter sell, and they'll be struggling to make profit. Why? Because they entered based because the thing was just falling. And you keep entering on emotions, believing that so far as it is dropping. Some people even make mistake of saying because interpreters have showed us FinVis, and you see that this one is red, it's selling, you just go there and sell immediately. No. There are structures and models to how to do these things. Gold is selling now. Doesn't mean you should run to gold, open the chart, and go and click on sell. No. You get that? No. What you are seeing here is a general evaluation of what the market is doing. Now you are just waking up. Somebody is just waking up since 7 o'clock. When some people have been up since 5 o'clock trading UK session, but some people have slept. Some people is just waking up. So if you are just waking up now to see gold in a red signal, and you now went to your MT4 straight up ahead, open gold chart, and you just came here and click on sell, pow, sell. It's a wrong note. What you are just seeing on FinVis here is just telling you that for gold to be selling, that means US dollar is strong. And yes, it is. I hope you are seeing that. US dollar is what? Strong. The same thing goes for this. Always try and refresh those pages because they change in seconds. You see, US dollar is strong. That is why gold is what? Selling. So any currency that is carrying USD as the quote will be what? Selling. So if I'm carrying GBP USD, that means I'm what? Selling GBP USD. But because the color here is as green as, what can I compare it with again? It's as green as the sky, though, ironically. If it's as green as the sky, you now went ahead to buy. No, it's a wrong note. If it is as red as tomato, you went ahead to sell. It's a wrong note. So that was why I said we'll be teaching us how we can prioritize market entries. You get it? Yoruba will say, the time you enter your house is different from the time you come in. But eventually everybody will come into the house. You get it? So for us to come into the market to make money, yes, it is selling. Should I enter now? No, you can't. So I'll be showing an example of what happened this morning. I'm showing us a fresh one, not an old history now. What happened recently this morning is what I want to show us now. Now, this is GBP USD. Now, when we go to, we locate GBP USD. Can you see this now? Are we seeing this? GBP USD, this is it. GBP USD is selling. Can you see how red it is? Though it's not as red as it's supposed to be. There are species of color in this place now. So this is not as red as it should be, but nevertheless, it is what? It is selling. But now, because it is red, is it advisable I just rush in to my So, which means once you want to prioritize your entries, what do? You leave, you ensure that you are not on higher time frames. If you're a day trader, you want to execute your trades within 1 day, you will just come to 1 minute. Now, if you see what is happening in 1 hour here, all I can just see is red candles falling down. I can't see structures. If I want to see structures, I will only say, okay, the market is an uptrend generally. But in every uptrend, there's always ups and downs. And in every downtrend, there's always what? Ups and downs. We call them the demand zone, supply zone, and demand zone. Supply zone and demand zone. But as an intraday trader, you want to ensure that you don't trade based on all of. Now, very good. As at the time I opened this chart, this candlestick was at this point. I hope we're seeing that. But now, for people that want to trade based on emotion and impulse and not considering what might happen in market structure, they will enter and by now they will be in loss. And they'll be like, the signal is wrong. That signal is saying, but that was because you entered in the wrong price. Now, you got a signal to enter a sell at this point. But because it was still selling, you now came to enter here. You cannot be in the same profit as those that entered earlier at this point, which is why you need to learn how to prioritize your market entry. 1, you now come to lower time frame, like 1 minute. Now, by the time I restructure this 1 minute now, you will see what happened that has been happening so far. Now, with this now, I believe we can understand. Please drop a message on the chat box. With this thing I've drawn now, this is just what has happened this is 1 minute. We are seeing structures in 1 minute. But in 1 hour, what are we seeing here? We are just seeing candles falling down. We are not seeing structures. Do we get that? But here in 1 minute, we are seeing what? We are seeing structures. We have seen structures. Structures are in place. Do you get that? Structures have been in place. Now you see that this market is what? Categorically respecting itself by what? Falling. So you see that the market went up at some level, came down, went to the demand supply. Now it is heading to the supply zone. Do we get that? So when it gets to the supply zone, it demands for another higher price to go up again. So so far so good. I've taken trades from here to sell to this level. I took trades from this level down to this level. I closed in profit. I left it to move to move to the demand zone again. Go to the demand zone. I took the demand zone and let it come to the supply zone again. And I took, when I mean supply, it came down to this line below. When I mean demand, it came down to the line above. It came down and supplied again. Then I took another trade to sell, and it gave me my profit here. Do we get that? So these are ways we can put our market entries. So if somebody wants to buy this market now, it's wrong. You can't buy when at this point that the market is now. If you are buying, you are doing the wrong thing. Definitely, you might eventually come back in profit, but as an instant market execution, you are buying at the wrong place. The market should have been able to get to this point, to this demand zone, then to this supply zone, then it supplies back to the demand zone. So when it gets here, you can now decide to what? Sell again till it comes down to what? From this zone to where? To this zone again. This is the way. These are ways we can prioritize market entries. But when we go to 1 hour, all we can just see is what? Candles going up and down. And if you keep saying you want to scalp, even if you want to scalp, if you keep saying you want to enter here and let it come down, you keep mistaking market movement. You will only be seeing candles here, but you will not see the structures that have happened within 1 hour in 1 minute, or preferably 5 minutes. Are we seeing this now? Preferably 5 minutes. We get that. So market has been moving in this structure. So for whoever wants to take any market now, this is what sell, or probably observe, keep observing this till it gets to this level. Okay, let me show us a screenshot of what I had this morning in structure. Okay, I think it's gone already. Okay, this is it. Should be showing this. Now, I believe you are seeing this now. Please, if you can see this, please put, just type I can see. Please, if you are seeing this, type I can see. I want to be sure people are with me. How many are we in this class? Are we still checked? Good. Now, when you look at my market entries here, you realize that at this point, I was able to take a sell from this point, and the drawdown came, profit rather, I mean, I had a floating profit and I had my take profit at this region. These are what we call calculated entries and calculated profit taking. You can't just enter the market and you expect to come out without having a calculated way of doing it. Now, this take profit has been calculated to take me out in $630. Do we get that? Now, but my market entry was above here, and the market came down to this level. Sorry, the market came down to this level and took me out in what? $638. Why? How was I able to make this money? Because I followed the principle of market entries, prioritizing my entries. If I had entered a sell from here, from this region where I have this my take profit zone, if I had entered a sell, it would take me longer before I can get into profits than those that have entered earlier than I did. Do you get that? So one of the things that you need to know is don't be quick to enter the market. Observe it. Sometimes 100% of our activities in the market is observation. How will I put it? 90%, 99% of our success in trading is observation. The remaining 1% is your entry. When we spend time to observe the market movement, and when we get the right entry, you enter and you come out in profits conservatively. So if you can sit on this, prioritizing your market entries, okay, people might be saying that because Mr. Francis saw this, let us go and see other markets as well. Now, can you see what the market is doing now? This is 5-minute time frame. This is a 5-minute time frame. Now, this is a time for people, for traders to observe this. In short, I'm taking it. This is a time for traders to observe this trade. And what is on the point of what? Resistance. It's on the resistance point. What does he want to do now? Market will be looking forward to what? To fall. But before I can go and say market will fall, let me look at the strength of GBP first. So I can ascertain if GBP as a currency is still strong or weak. Then we come here and check, then refresh. We reload the chart, we reload the page.